What's up, guys? My name is Ara. This is Rosara's Investments, and I would like to give you my opinion on how to structure some of your financial accounts, like your crypto wallets and your accounts to buy and hold stocks, common stocks. I am not a financial advisor, so do not take my advice. I am only giving you my opinion based on experience, about 15 years experience investing and trying to build wealth. But I'm not a financial advisor and I'm not an accountant, so you do have to make up your own decisions for yourself. Don't take my advice. So that being said, I think that you should invest in everything. That would be the short answer. So I like to invest in a very, very wide variety of things. Obviously, stocks are my favorite investment, but I've met people that invest in so many different things, like antique cars, like artwork, like watches, precious jewelry, precious metals. So I think people should invest in everything. I'm not exactly sure what is the best investment. I think stocks are best for me personally, but I do think that most people should have a variety of different investments. It's good to be diversified, but also because it is just a nice feeling to own a bunch of different things. And if one thing does bad, then other things might do good. So first on the list would be a checking and a savings account. I think everyone should have a checking account and a savings account. And this is just a place to park your money before you decide what to do with it. Savings account is something that I actually don't have, but I have other places I put my money before I invest it. And for the most part, I just use my checking account for most of my day-to-day transactions. So it's easy enough to get a checking and savings account. You just go to the bank, give them your social security number, tell them a couple personal things about you, and open it up. So second on the list, which I think is your most important account, is your brokerage account. So you can have a brokerage account at a place like Fidelity or Robinhood, which is an app that you can get on your iPhone. And these are places that you can buy stocks, sell stocks, and hold stocks. So when you open up an account at Fidelity, they're going to ask you for some similar information as if you were opening up a bank account. Same with Robinhood. They're going to ask you for your social security number. You're going to have to give them your bank info, your checking account info. That way you can actually transfer money to your Fidelity account or transfer money to your Robinhood account. And they will ask you if you're a 10% owner of a major company, which I've never met anyone that is. They're going to ask you some stuff about your work, and that's just for tax reporting purposes. It's more like a survey situation, I believe, just to get a general idea of what people are doing and how much income people are making. But yeah, I think opening an account at Fidelity is a very good thing for almost everyone to do. A regular brokerage account is an account. You can kind of think of it like a savings account, and you just put your money there. You can have automatic deposits from your paychecks being deposited to your Fidelity account, and then it's going to sit in what looks like a cash account or a core account, I think they call it. And then from this core account, let's say you have $1,700 in your core account and you want to buy a stock, $500 worth of stock, then you buy that $500 worth of stock, and now you have that $500 worth of stock, and you also have $1,200 in your cash or your core account. So that's basically how it works. Now, brokerage account, you do get taxed on the money that you make in this account. All your dividends will go to your cash account in your brokerage account, and they will automatically go there. And you can also buy things like ETFs, mutual funds, index funds through this brokerage account, and you will get taxed at the normal tax rate, whatever the tax rate is for you or for capital gains or for dividends. So that's a brokerage account. Also at Fidelity, you can get other types of accounts, like a Roth IRA is something I have, ROTH IRA. So Roth IRA is used for retirement purposes. This is for very, very, very long-term investing. I would say in my brokerage account, I usually have a 5-year to 25-year time span when I make an investment. And in my Roth IRA, I have a very, very long-term time span. I pretty much never plan on taking the money out. And a Roth IRA, the big benefit is that you do not get taxed on your capital gains. You do not get taxed on your dividends. There are restrictions to this account, which you can look into, but the major restriction is that you are not supposed to take out the money before you're 59 and a half years old. So there is a huge benefit that you don't have to pay taxes on, and if you're making hundreds of thousands of dollars eventually, it's very nice to not pay taxes on that money. So that's the benefit to a Roth IRA. I personally think everyone should have a regular brokerage account and a Roth IRA for retirement. Also, if you have kids, you can get a 529 account. A 529 account is typically used for educational purposes, and it does have tax benefits or tax deferred benefits. The particular account that I got for my daughter, she doesn't have to pay tax on her capital gains or her dividends as long as she uses that money for education in the future. There are much more details to this account that I don't understand, but those are the big points, just to give you a general sense of what a 529 is. I think most people understand pretty much what a 529 account is. So, brokerage account, Roth IRA for tax-free growth, and 529 for college savings. And so in each one of these three accounts, I do own stocks. I own options in my regular brokerage account. I own regular stocks and ETFs for my daughter in the 529. And in my retirement account, I own mostly stocks. I own some mutual funds, some index funds, and I think I own an ETF, if I remember correctly. So, in addition to these accounts at Fidelity, I opened up an account at Robinhood. Robinhood is an app that I have on my iPhone, and I believe you can get it on Android. And this Robinhood trading account is very good because they charge $0 commission, which is great. So I just got the account to try it out. I don't plan on putting significant money into this, but I think for people that are investing anywhere from $10 to $2,500, let's say, I think Robinhood is a great choice for them. And the reason is because you can buy very small amounts of stock and you don't have to pay a trading fee. So one of my trades, I bought one share of AMD for like $11.40. And I would never buy one share in my Fidelity brokerage account because they would charge me a $5 commission. And they would charge me another $5 commission when I eventually sell it. So it's $10 in fees in Fidelity. For the size of trades that I make at Fidelity, $5 is a very good deal, and I don't mind paying the fee. But for Robinhood, if you're only going to buy one share of AMD, for example, if you only want to invest $11.40, it's very, very nice to not pay commission because those do add up. And that's one of the biggest ways to lose money long term is to pay a lot in fees to places. So I did try Robinhood. I own one share of Square. I own 4 shares of NAK. I own 4 shares of APPS, I think. APPS. And I own a little bit of this and a little bit of that. And they also actually give me 1 share of Groupon for signing up. And the person that signed me up got 1 share of whatever, 1 share of Sprint or something. So that's a nice little benefit. So I think the Robinhood account or the Robinhood app is a very good choice if you have a few $100s to invest and you're just getting started as an investor and you kind of want to dip your toes in the water and get a feel for buying stocks. I strongly suggest always placing limit orders. That means if I did not want to pay more than $11.40 for 1 share of AMD, I would type in a limit of $11.40. The alternative to a limit order is what some other people do. They put in a market order and your purchase goes through at whatever the current trading price is at the moment. For a very popular stock like AMD, it might go through at $11.40, $11.41, $11.42 to give you an idea. But for less popular stocks or stocks that are more thinly traded, which means they don't trade very frequently, they're not very popular, then someone might have a sell order in at $11.90, let's say, for an example. And so when you put the buy order in for a market order for AMD, it might go in for $11.90. So it might be more than you were expecting to pay. So the big benefit to putting a limit order in is that you don't pay more than you expect. If I want to pay $11.40, then that's all I'm going to pay. If the only people out there in the world are asking $11.42, my order never goes through. I just don't buy the stock. It just never goes through. So that's the benefit to using the Robinhood app, the trading account. It is a real brokerage account. And I tested it, and they do not charge fees. They make money through the extra cash that happens to be sitting in your account. They keep the interest from that. And they also make money through lending people money via margin, which is beyond the scope of this video, but I highly suggest if you are watching this video and taking my advice to get an account, you don't know enough about trading, and you should not be dealing with margin anyway. So for you, my listeners, Robinhood would be completely free. So highly recommend it. So in addition to checking account, savings account, 3 accounts at Fidelity, 1 brokerage account on the Robinhood app, I strongly suggest investing in cryptocurrency. Now, I would not suggest investing a lot of money. Personally, I have about 2% of my net worth invested in cryptocurrency. I own more Ethereum than anything else. I also own Bitcoin. I also own Litecoin. I own Golem. I own BAT, Bitcoin Cash, Ethereum Classic, and some others that I'm not remembering right now. But I own about 10 of them total. I do think many of these coins / companies have great potential, and I know that a lot of them are either classified as a store of value, or classified as a currency, or classified as a company. And I suggest that you do your own research on different coins or companies that you want to invest in. I'm not going to recommend any in particular. I will tell you that I have most of my money in Ethereum and second most in either Bitcoin or Litecoin. They're both about the same. But that's not what I'm recommending to you. Those are just the 3 most popular coins, in my opinion. And I just like to have the majority of my investments in those 3. So where do you buy them? I originally bought my first purchase of Bitcoin on Coinbase.com. So Coinbase is a place where you can link your regular checking account, and you can give Coinbase cash, and they give you back Bitcoin, or they give you back Ether, or they give you back Litecoin. So Coinbase only deals with those 3. So when you sign into Coinbase, they are going to ask you stuff like your social security number, your email, your address, personal stuff like that. And when you get your bank account linked up, then you can start making purchases. And Coinbase will give you 3 wallets. They will give you 1 wallet for your Bitcoin, 1 wallet for your Ether, and 1 wallet for your Litecoin. Now, I have heard, and I think it's a good idea, to even though you have the ability to store your coins in these wallets on Coinbase, I do not suggest keeping your money on Coinbase. And there are a variety of reasons. You can Google those reasons if you are interested. So what I did is I got a number of different wallets. So wallet is a place where you can store your Bitcoin, your Ether, and your Litecoin. So one of the wallets that I have on my computer is called Exodus. Exodus looks beautiful. It is a beautiful looking wallet. It's just visually very nice, very easy to use. You can trade any one of your cryptocurrencies for a number of other cryptocurrencies. And it's slipping my mind. I think it's called Shapeshift, if I remember right. I think it's called Shapeshift. But it's built right into the Exodus wallet or Exodus software. So it's very nice, easy to use. I highly suggest playing with it and getting used to it. So somewhere else that I keep the majority of my Ether and some of my Bitcoin is called a Trezor wallet. And a Trezor is a little USB drive that I can keep in my pocket or I can keep anywhere. And I hook the Trezor up to my computer via one wire. And then I can go to Trezor.com or myetherwallet.com or different websites like that. And I can see a code on my Trezor and put in a PIN number and go to those websites and have access to my Bitcoin or my Ether. I currently only store Bitcoin and Ether on my Trezor. I'm not sure if, how much of other stuff you can store. Currently, I keep a lot of my Litecoin on Coinbase still, and that's mostly out of laziness. I just haven't looked into other places to keep Litecoin. I do keep some on my Exodus wallet too. So another place that you can store is your Jaxx wallet. Jaxx, Jaxx, is very similar to Exodus, and I would say as far as being easy to use, Jaxx and Exodus are equally easy to use. The Trezor is slightly more complicated. It is not complicated once you do it once, but your first time you might be slightly confused. Jax and Exodus are both very, very easy to use. You download the software onto your computer, and you can see all the different wallets you have for Bitcoin, for Ether, for Litecoin, for all kinds of different stuff. So these are the 4 places that I keep my cryptocurrency. The reason I do this is just to store stuff in different places. So that's cryptocurrency. I also think that there are alternative investments that people can make, as if cryptocurrency wasn't enough of an alternative investment. I would maybe recommend investing in gold, silver, platinum, or palladium. I would suggest looking into these markets a little bit before you make your first investment. In my opinion, silver is very cheap right now. Silver's trading usually around $16 or $17 an ounce. So I think it's very, very cheap to buy 1 ounce pieces of silver. Sometimes you can buy the 10 ounce bars for like $170 or something like that. You could probably buy 1 ounce of gold for $1,300 and change. I would suggest buying the physical metal that you can hold in your pocket, that you can put into a security box or keep in a safe place. I do not suggest buying any type of gold or silver that is not in your physical possession, because I think it's very important to have these things in your physical possession, which is another reason why I bought the Trezor wallet for my Bitcoin and my Ether, because I want to have all the Ether that I have in my physical possession. I want to have control of those public keys. So that's gold and silver. I think one thing that you should consider when before you buy gold, silver, palladium, or platinum is if you are going to want to sell it, then if you're going to want to sell it fairly quickly, like within a year, I probably wouldn't even buy it in the first place. I think you should buy it for a very, very long-term investment and hold it for years or even decades. But I think you should consider, when you do decide to sell it, how are you going to sell your silver? How are you going to sell your gold? If you buy one of the more exotic metals like palladium, platinum, rhodium, how are you going to sell that? How are you going to get your money back? Or how are you going to get your money when it's up, 3, 4, or 5 times what you originally paid? You don't want to just have to go to a pawn shop and get your money back. So that is something that is probably slightly more difficult to do. So it's just something to consider before you make a purchase. It's always good to have an exit strategy. So other investments would include lending money. So lending money is very complicated. I think the concept is very easy. You give your money to someone else and they give you back a little bit more. This comes with different types of risks than stocks, very, very different than cryptocurrency, and very different than gold and silver. So with lending money, you want to have a reasonable expectation of how you're going to get your money back. So one site that I use for lending out money is LENDINGCLUB.com. So currently I have many, many, many small loans of $25 each. So the way that Lending Club works is that me and other lenders, we lend our money to people that need money, borrowers. So to give you an example, if someone wanted to buy a truck and it was $23,000, then my personal portion of that $23,000 loan is only $25. So the borrower owes me $25 and he owes 1,000 other people $25, or whatever the math comes out to. So it is risky in a sense, but I think Lending Club does a good job of defining that risk. To give you a very quick and dirty example of what Lending Club does is they divide the people. If you have very, very good credit as a borrower, they would rank you as an A. If you have very good credit, they would rank you as a B. If you have good credit, they'd rank you as a C. If you have pretty good credit, they'd rate you as a D, and so on and so on. So I decided to invest 40% in A, 30% in B, 20% in C, 10% in D, just to see how it goes, just so I could do a review on it. And it seems like my loans are starting to collect interest, and I did receive a payment, so I'm starting to make money on that. And Lending Club also does a good job of telling you the default rate. So someone that would be classified in the A category might have a 2% default rate on average, and someone in the D category might have a 10% default rate on average. But the amount of interest you would charge someone in the D category might be 20%, and they have a 10% default rate. I don't know what the numbers are exactly. I'm just trying to give you a ballpark of how it works. So someone in the D category, if you're charging them 20% interest, but they have a 10% chance of defaulting, then altogether your expected return on all your loans to people in the D category would be about 10%, the difference between the interest rate and the default rate. So someone in the A category might have a 7.5 interest rate and a default rate of 2%. So you would make a expected profit of 5.5% returns on your money. So for taking the extra risk of lending to the people in the D category, you would be expected to make a higher return on average. So that is on average. And obviously when you are one investor, you're not going to get an average return. You're probably going to do better than average or worse than average. It's very rare that people do exactly average in anything. So you just have to understand that when you go into it, that there is a chance that people will default on the loans and you won't get your money back. So those are the 4 main categories that I wanted to talk about today. And I would recommend investing in silver. I would recommend investing in LendingClub. I would recommend investing in cryptocurrencies, and I would highly recommend investing in stocks for a very, very, very long term. These are all long-term investments. I do trade, but when I talk to other people, like my mom, my sister, people like that, I would definitely recommend investing for the long term and just becoming wealthy slowly. Thank you for listening today. I hope this helped some of you. If you have any questions, please feel free to message me on Facebook, or if you have my phone number, just text me. I've helped so many people in the last couple months, and it makes me feel good to see people start creating wealth. So, talk to you later.